This is Matt Graham with the MBS Live Market Update. Bonds are stronger today after being weaker on the half-day Friday of last week. But in general, this week and last week are really just placeholders between the CPI data from 2 weeks ago and the upcoming significant week of data in the first full week of December, that being next week. Last week's data was arguably forgettable, although there were a few reactions to things like jobless claims and consumer sentiment, largely because consumer sentiment showed inflation expectations rising yet again from the preliminary reading and settling at 4.5% on the one-year level at the final reading. And if you're wondering what that means, preliminary versus final, consumer sentiment comes out 2 times a month. The first is preliminary. The second one finalizes those numbers. Friday didn't have much data. S&P PMIs came out right in line with expectations, but the trading momentum has more to do with thin, illiquid trading on holiday weeks. Friday is really only open because the bond market is never fully closed for 2 days in a row. And it's not a day that traders and analysts really count when it comes to following trends or determining if a significant move has happened. Everybody is generally waiting to see how things adjust the following Monday, that being today, and things have adjusted back into the range that they were in last Wednesday, unsurprisingly, or surprisingly. I would say unsurprisingly. As far as this week goes, the biggest data points early in the week are the Treasury auctions. It's a condensed Treasury auction cycle so that it can get in before the end of the month. And we get both 2 and 5 year auctions today and then 7s tomorrow. We will get updated conforming loan amounts tomorrow after the FHFA home price index comes out. And then on Wednesday, we'll get the second reading of GDP, so the first update. And that will be at 8:30 a.m. Wednesday morning. Thursday, jobless claims, Chicago PMI, pending home sales, and Friday, we actually do get one of the top tier reports that typically comes out on Jobs Week, and that will be ISM manufacturing. But most of the top tier data will be out the following week. Notably, even though this Friday is the first Friday of December, we do not get the jobs report until next Friday, December 8th. As far as rates and the outlook, again, things have been very flat. But thankfully, they've been flat near 2-month lows as far as mortgage rates are concerned and as far as treasury yields are concerned. And it seems that the upcoming week of data is in a good position to cast a vote on whether the recent improvements continue or whether the sort of floor that we've encountered is a longer-term floor. At the risk of repeating an often repeated phrase, the market remains highly data dependent. That has been and will continue to be the case. And it will also continue to be the case that we need to see 2 to 3 months of cohesive messages from several key reports, especially CPI and the jobs report, showing some measure of contraction in the labor market or ongoing contraction in the labor market, as well as progress toward the 2% inflation target. Not quite there yet, moving in the right direction, and that's one reason rates have come off the big picture ceiling. But we still need more, 2 to 3 months more of that sort of data before we can really confirm that we are making great progress down from the ceiling back toward more sustainable rate levels. That's going to do it for this week. Back to you.